A choppy Wednesday, the Dow and S&P 500 rising modestly on fiscal stimulus hopes, but the Nasdaq slightly in the red on the day that Tesla reports. Well, let's get a view on Tesla as well as the market outlook from David Yepez. He's a portfolio manager and senior analyst at Exencial Wealth Advisors, joining us from Oklahoma City, Oklahoma. Welcome, David.
Thank you for having me.
Great to have you. Now, Tesla is rising ahead of its earnings today on the hopes that it'll be included in the S&P 500. But for that, you've got to have 4 straight profitable quarters. Wall Street's expecting a loss for the quarter. What are you anticipating?
Well, I think the quarter is going to be good. In terms of deliveries, they already announced the deliveries a little higher than expected. And so we think they're going to beat and they're going to be profitable. So that I think that's going to be the thing that is going to put Tesla stock at higher levels. And so, I think that they're just going to continue to do what they do best.
All right. So you think they will turn a profit this quarter and then be included in the S&P 500, which will get more buyers into the stock. But your firm has a position on Tesla. From what I understand, they've more than quintupled since you bought them. Tesla shares have more than tripled this year alone. Should investors then hold on to the Tesla or add on to Tesla, given your belief that they'll be included in the S&P 500?
Yeah, I think we have been trimming a little bit our exposure because in some of our client portfolios have become a bigger portion. But I think long term, Tesla is going to benefit from the electric vehicle adoption. And so, they're going to be the main beneficiary of that. So I think if you're playing it long term, 3 to 5 years, I think you're going to do okay. We think it's going to quadruple in price from here in the next 5 years, just because we think they're going to have the major market share on the electric vehicles.
Wow, quadrupling from this point on. All right, let's check back with you in a few years on that. The equity markets have rallied as well, more than 40% since the lows in late March. Do you foresee a correction or a pullback for the markets?
Markets go up 70% of the time and they go down 30% of the time. Now, you mentioned the 40% return since March. I think it will be natural for the market to pull back a little bit, but I think the dip is going to be an opportunity to put more money to work. Because every time we have a wall of worry, we have virus coming up, second wave. We have all this thing with the elections coming up. Biden may increase taxes. And then we have China-U.S. relations tensions. Every time we have a wall of worry, it has been my experience that you have to invest in those periods of time. So I think if you're looking 3 to 5 years, you're going to be okay.
And what should you be buying on the dips?
Yeah, so we're focusing on 2 things. We're buying growth, companies that are going to grow regardless of the economic environment. And we're also buying value. Those are companies that maybe are in turnaround mode. So think about new management teams coming in and making the business better. In turnaround stories, you get that profitability increase. And so, for example, if Biden gets elected and taxes go up, you can have that protection from the margin expansion. So we're buying both. I think a portfolio manager right now should be looking at risk management. Make sure you don't have too many concentrated positions, and make sure you have diversification across different asset classes.
Lastly, any particular growth sectors or stocks or value sectors or stocks?
Yeah, so we like Akamai Technologies. It's a cheap play in cybersecurity. We think that right now the cybersecurity makes 30% of the overall revenues. We think in 5 years it's going to become more than 50% of the overall revenues for the company. And so there's going to be a reprice higher for the company in the next 3 to 5 years. So we like that. We also like Sanofi. It's a turnaround story, new CEO with new management team. I think they have a good track record. They have a drug named Dupixent that we think is going to be the next Humira. And so they're going to have blockbuster sales in the next 3 to 5 years. So another value stock for you guys.
All right. Well, thank you. In addition to the growth stocks. Thanks a lot, David.
Thank you.
Our thanks to David Yepez of Exencial Wealth Advisors. I'm Fred Katayama in New York. This is Reuters.